What is good, everyone? Welcome to today's mega charting session. Today is Sunday, February 16th. Today we're going to be going over this week's price action. We're going to give a little weekly outlook for next week, a little educational session if maybe, and answering any questions that you guys have, okay? So the session is full of sauce. This is time to ask questions because there's not that many people. You know, it might be kind of harder to ask questions, you know, when we're in what's it called, live streams, because there's people that are just signaling. But if you're here to actually learn something, good job, congratulations. And that being said, let's get into this. All right. So I ended up taking 4 trades this week. I went 3-1 this week, and all of them were traded live.
All of them are shit. All of them are shit, and you're shit.
And all of them, I think, were mech model. No, that was a lie. But there was a lot of good mech models this week. Like, an amazing week for mech model. Amazing week for just inversions in general. But I did start off the week with a L, which made everyone panic. Blake is washed. Blake doesn't know how to trade. Blake is the worst trader ever. I'm unsubscribing.
Because Patty and Blake are the fucking goats. And now I'm fucking here.
What? Who was that? What just happened? Who's on stage? Yeah. No.
Fire, bro. That was fire. I'm happy you got to enjoy that. It looks beautiful as well.
Who's? Oh, it's not in this chat?
It's in piano. It's in piano.
Okay. Let's go back to what we were doing now. All right. Yeah, wait. Let's change the colors back. I don't like this. All right. So coming into the week, guys, I really should have been more bullish. I think I had a lot of just bearish biases for the week, and I just had a very wrong. I mean, actually, my weekly outlook. If you guys go to last charting session, I said that my outlook for this week is going to be dependent on this 4-hour gap. If we can sweep it and we can, if we can sweep this low, deliver higher, then I'm going to be bullish. If we displace through this gap, then I'm going to be completely bearish toward these relative equal lows. Very simple biases because this also was at that 50% of the range, right? So it was a really easy bias. But I kind of just faded that bias on Monday and I kind of forgot about it, which maybe, I mean, I probably shouldn't have taken the trade that I did on Monday because this was a very clear sweep of this low, very clear bullish bias. But let's get into the trade that we took on Monday. All right, so I ended up having actually a bearish bias coming into the day for a lot of reasons, though. I think I put too much emphasis on daily profiles, maybe. But overall, this is still like a phenomenal trade. Looking back at it, why is your mic a popcorn bag? Is my mic bad? Sounds bad.
Sounds good to me, bro. Don't listen to the haters, bro.
Okay. So coming into the week, right? I like these equal lows right here, right? So we had equal lows with London lows, and then we also generated equal lows. I'll show you when we took this trade on Monday. But I saw this as a London Judas swing. Why did I see this as a London Judas? Well, London session really didn't trade into anything significant. Maybe you can say the order block, but there wasn't really much that sponsored the move. And especially with equal lows, if we have equal lows, it usually is a Judas swing for London, and that usually is the daily profile, and it will get traded back to. So I was bearish for that reason, but I was also bearish because we ended up having this move at open. We ended up trading at 9:30. We had a open low, making equal lows, triple equal lows here. We swept out this buy side liquidity right here. And we also swept out this 15-minute intermediate high right here, right? So this was a textbook setup, and then we ended up having this 2-minute IFEG. Just like, again, like this is a setup that was a no-brainer. I'll take any day of the week. Like this is just a setup I would take any day of the week, really. Okay, got stopped out after we took out this internal low. Now, again, there's a lot of questions like, oh my God, but you should have moved your stop loss to break even. Guys, I'm going to show you, like, there's times this week where break even wouldn't have saved me. And then there's also times where break even does save me, right? It's just like a matter of conviction. And in my opinion, like these equal lows is just, I was just super high confidence for this.
You were super high?
Yes, I was faded. That's just why I took this retarded trade. No, I'm just kidding. But yeah. So again, this is just like a trade I would take any day of the week, like whenever it presents itself. No brainer setup. But yeah, I mean, I don't really think that this was a good break even. I mean, it obviously saved, but what? What?
Nothing.
Anyways, does anyone have any questions before I move on? This was also a Monday, but I did trade this on my live account, and I did lose this trade on my live account.
Dumbass.
Yeah, I shouldn't have traded Monday, but
Dumbass.
does anyone have any
You're
questions?
bad at trading. You're bad at trading.
A Judas swing is essentially just a fake move. So, for example, if you want a Judas swing for the morning session, what it is, it's just 9:30. We will have an open, and if you're going to be bullish, you want it to trade lower at first, manipulating out people, and then to trade higher. And that is a bullish Judas swing, and then a bearish Judas swing looks like this, where we have an open, high, low, close. Textbook is just like an A+ setup. It's a setup that I see has a really high win rate. If I see happen, it's like a no-brainer. It's like a light bulb. Does that make sense? So you got on the 1 minute there. No, there was a 2 minute. Do a quick example of equilibrium. Sure. I mean, just right here, just this range is equilibrium is here. You just draw the low to the high. That's equilibrium. This is equilibrium from this high to this low. Equilibrium's here. Do you only take break even at intermediate low or high if the TP is less than a 1-to-1 RR? No. Can you explain your entry on which time frame? Yeah, so if I'm looking at this leg here, right, from these equal lows from my target to the high, I'm looking at the highest time frame in this leg. So there's a 1 minute. Is there a 2 minute? There's a 2 minute. Is there a 3 minute? No. So the highest time frame is a 2 minute inversion. So I'll wait for that to get inverted. Okay. Can we stop fucking with the colors? Can we put it back to the nice blue and diamond? Intermediate term high and lows, I don't fully grasp them. Yeah, so an intermediate low or an intermediate high is basically just a low or high inside of a fair value gap. So, for example, let's just go on like the 5 minute time frame. This is like a low inside of a fair value gap right here. This is a low inside of a fair value gap. This is an intermediate low inside of a fair value gap. Why is that not a good break even? It looks good. Well, yeah, in hindsight, of course, 2020 vision is hindsight, but just this is a trade I just wouldn't go break even just because of triple equal lows and how textbook the setup is overall. But yeah, definitely in hindsight, it would have saved me. But I'll show you a trade on Friday where the break even point made a lot of people go break even, and it's just like, I don't know, when the break even obviously works, that's when people talk about it, and then when it doesn't work, that's when they don't talk about it. It's just like, that's just that. Anyways, didn't take anything at 1-to-1 at a 1-to-1 RR. No, I think I got in later. That wasn't a 1-to-1. I think my entry was around here, so no, I didn't scale anything. There's times I scale, there's times I don't, but you do need to take the highest time frame IVG. Can you explain the significance of equilibrium? When is it utilized? Yeah, so equilibrium is just like, for example, if we have a large range or we have a move up or a move down, you want to see price trade back to equilibrium of a range. That's usually going to give you like a really good, like a better entry. For example, you want to be buying in a discount like here versus buying up here. Why? Because for one, your RR is just going to be bad. So you're just going to have a really bad RR versus, if your entry is over here, then your RR is going to be a lot better. So R and also it's just like premium discount. But yeah, it's usually used on also like higher time frames. For example, my bias for last week was really dependent on equilibrium because we had this range here. And if we are going to be bearish, we should disrespect this equilibrium, the liquidity below equilibrium. And if we're going to respect it, then this is a point where we should sweep it and then run higher, right? So, usually 50% I take off at TP1. what do you guys consider as a higher time frame PDRA, like the move to be sponsored? For daily profiles, I'll look at the 30-minute and above. What times do you put your stop at the rejection block compared to the wick low of the OB? If there's a OB, I usually just put it at the OB. It really depends on the setup, but for example here, I think I put it at like the OB, the 1 minute. I struggle a lot with order blocks. Some people say it's the series of candles. Some people say it's the previous candle sweeps liquidity. Yeah, I mean, order block is, in very simple terms, like a green candle sandwich between two reds, and that red candle closes below the green. If we're in bearish order flow, then this should act as resistance, right? But like a good a good order block is like this one right here is a good order block. Why? Because it swept liquidity, and it was the up close candle that swept liquidity. Once we close below that, that's a change in state of delivery. It's a creation of an order block. Yeah. Okay, what do you guys? I just answered that. Yeah, I did. That's an inversion for rally up on the 2 minute time frame. If the bias is bullish and 1 hour and 4 hour bullish for rally ups are getting respected, do you care if there's like 2, 3, 50? No. I got so tripped up on long lows to say, yeah, same. All right, let's get into the next day now. So coming into Tuesday, I didn't take any trades Tuesday. I think I took one trade in PM actually, but it was just a break even. So coming into Tuesday, it was a pretty chopped day. Now there was a trade that I did call out that I said if I had to take a trade today, like this is the trade I would take. Wait, what did I just skip to? Monday. Where's Tuesday? Where's Tuesday? Where Tuesday at? Keep it up. It started a world. Keep it up. Okay. All right. So coming into Tuesday, I also had a little bit of just the bias was really dependent on. I mean, this is what I saw. So I was coming into the morning. Let's just whip out this daily bias here. So I did say I was bearish coming into this morning because I did see the London session move being sponsored. Now, overall, like this week, I just should have been more bullish, and I think I just kind of screwed with my draws on the day. I mean, not that there was even not that really daily bias matters that much. I mean, obviously, like the first 10 minutes I saw of price action, I immediately flipped my bias. But what I was looking at was just essentially that London session traded into an hourly, Asia session also traded into an hourly. However, we do have an SMD at the 4 hour gap. So I did say if we end up getting a 15-minute CISD at open, then my drawn liquidity will be towards that 4 hour and London highs. Right? So we ended up getting that 15-minute CISD, which is, I was looking at this candle right here at open. And we kind of just ran through all of this, but that's when my drawn liquidity got flipped higher towards that previous week. Or I think it's previous day. I'm not too sure. Let's see. Let me open back up chat. Okay. But yeah, so we had this move at open, like literally no entry, obviously. We just ran straight up around 100 points at open. So at this point, I'm waiting for just really something obvious because we are obviously just accumulating, right? We then had this manipulation lower. I know I'm going to get the question, why didn't I take this short? And why didn't you like this short? I'm overall bullish. Okay, so after this move happens, I'm bullish. For two reasons I didn't like this short. Number one, guys, when we have data highs and data lows, what you should do is wait for one of them to get taken and then trade it to the opposite end. So, for example, if we took data highs here, then a short to data lows would be good. If we took data lows first, then a long to data highs that's untouched would be good, right? So just think of it like that. Just think of it as a range. Wait for one of the ranges to get taken, and that is the easiest way to bank with data highs and data lows. Now, we ended up trading lower, and we had this SMT right here. And I'm going to be honest, like this was an okay trade. We had a 1 minute CISD. We also had, this was the highest time frame inversion. To be completely honest, I just didn't like price action in general. Like this is just too choppy. it was just not that good in my opinion. But I did say that if I had to take a trade today, this is the trade I'd take. So I just forward tested this long here. A lot of people did take this. I didn't, just because I didn't have the confidence for it. But I mean, stop loss would have had to been like here maybe. And yeah, that was a trade. But other than that, I mean, pretty shitty day. Does anyone have any questions on this trade for this day? Do you take SMTs on every time frame? Yeah. Can you look at the trade in lunch? 5-minute IFG long in lunch hour. Wow, this price action is horrible. This is just not like good price action. Yeah, I mean, this is just a day where I just wouldn't take anything. Like this could play out like this is just this is too choppy. This is just not good. We're also super high into a premium here. Yeah. Not the best trade. I do remember that though. When do you consider SMT necessary to take a trade? It's never necessary. I never need an SMT to take a trade. It's just extra confluence and it's just good. Better. Can you show an example of a breaker block? Sure.
Once your main draw liquidity is taken and you start stalling, what would be your next area you think price would trade to? You can give examples. Yeah, that happens a lot. Honestly, like when I guess session open, like New York session open will deliver its draw liquidity and you'll get no entry. But there's a reason, like you got to think about it this way. There's a reason that drawn liquidity is set in place to begin with. So if we're going into New York session open expecting price to trade to London highs, right? Like that's our main drawn liquidity, and that gets hit. What's going to happen now? We're going to wait to see if price wants to reverse from there, because that is a significant liquidity pool and it would be an area for price to reject and reverse. And so from there, after that gets taken, we want to see if we could find a potential reversal. There's times where it's like, you just have to analyze if the main drawn liquidity gets taken and I don't know, like let's say London highs just gets ran through and price is not like reversing and you keep delivering higher. You can go into like, I guess, even higher time frame, look for previous day highs, previous week highs, and try to find a continuation. But there's, like I was saying, the main thing I need you to take away is that when those main drawn liquidities get hit without us getting an entry, 90% of the time you will see us try to take a reversal from that point. So, but yeah, you just gotta wait for structure to be created after the drawn liquidity gets hit. You don't want to enter like a short right after London highs gets taken. You know what I mean? You gotta wait for some confirmation. Like what I always tell people is just like when you want to utilize conditions, because you're taking a higher time frame PD rate. What do you want to see now? You want to use time frame alignment. You want to see like a 5-minute bearish fair value gap open up, and now create that as your condition. See if price respects that newly formed bearish gap. And so that's when you can like start to formulate in your head, okay, is price respecting bearish or bullish? And you just really go from there. So yeah, we've done a couple lessons that would help you a lot with that question. If that's like something you're really interested in. I talked about structure recently in one of the previous educational lessons, and then I would pair that with conditions, and you'll understand really exactly where I'm going about with this. Like a short-term bias, yeah, so to speak. In the sense where you would now have a drawn liquidity lower after London highs gets taken. If there's a reason to trade lower though, like realistically, if there's no liquidity being generated, no imbalances in price, like there's no like unfilled 15 minutes, unfilled 5 minutes, that you can be shorting to, and like just a range in general is rebalanced. Obviously you're not going to want to look for shorts. In that case, you just wait for structure to form, but yeah, you really are just formulating, I guess, short-term biases, or more so like internal, trying to find newly created internal liquidity to trade to. That's the biggest thing. Are you recording these sessions? Yeah.
Yeah, no, you don't need an SMT.
A+ setup on the continuation model is like the biggest thing, really. Like guys, when you're taking continuations, the number one factor is that external drawn liquidity is still intact. Like I'll let you elaborate on this because you're on the charts.
Yeah, I mean, well, I'll show you guys in the trade that we took on Thursday and Friday. I think also Wednesday was continuation. I think no, Wednesday was mech. But it's really just like, yeah, like Patrick was saying, if we come really close to a high and it's just really obvious, for example, we do something like this, we then trade lower, we generate low resistance liquidity, maybe we generate equal highs, trade lower, maybe go down to a 5-minute or 15-minute gap, and then we still have that external liquidity, and there's an SMT. I would say that this is like a A+ continuation, something like this. But yeah. Okay. If there's a breaker at the bottom of a dealing range in a bullish move, but we get a setup at equilibrium delivering off of fair value gap with a smaller time frame inversion, would you still wait for that breaker to get hit? No. If we already hit equilibrium, then there's really no reason for price to trade lower. But obviously there's times where it does. But yeah.
Yeah, you don't need to wait for a breaker, especially if the range is already rebalanced.
Yeah.
Like, honestly, the number one factor is that you're just like, price is trading away from something. So like, it's not about whether it's hitting that breaker or not. It's more so like, did it hit anything else to support your trade? Like if it trades like a 5/15-minute fair value gap, fire. Like that's really all you need. Is the range rebalance? Cool. That's really all you need. You don't need like a breaker or an OB or anything to get traded into. But obviously, just things to keep in mind.
Yeah, obviously there's like times where it does happen where you wait for that to get hit, and it's definitely better. But yeah, honestly, sometimes I do. If I'm like not confident in it, I'll wait for like an OB to get hit. But that's only if it's. I mean, that's a good question, but it's only really if it's below equilibrium is where the OB is. If I want to see equilibrium get hit. Okay, so
This guy said, "Do you guys have SCDs when you guys trade?" No. I don't even know why you would ask that, really. But yeah, we don't have SCDs.
okay. Anyways, so again, what I was looking at in the morning was that CISD on the 15-minute. So once we got this is what I was looking at for PM session. Was I wanted to see this CISD get traded into to then take a long off of. I was looking at this for PM session. We hit this CISD here. We ended up trading lower into this discounted 5-minute gap right here, and it was just a very obvious long. Because we also didn't take out these highs, right? We didn't take out previous day high here. We just generated liquidity, so this was like a perfect long for PM session. I ended up absolutely getting fucked here by my break-even point. And yeah, that was just a trade I took in PM session, but it was just a break-even. So far, the start of the week was pretty rough. Just had one loss and one break-even. That could have been a banger, but unfortunately, break-even didn't save me there. But I do think it was a good break-even point, to be honest. I was like, fine. I think because there's also an SMT. But yeah. Let's go into Wednesday now. Wednesday, we ended up taking a mech model trade. It was really good price action Wednesday, if I remember correctly. Yeah, there was a lot of good setups. Okay. So there was like 2 really good setups, and we took one of them. So let's get into this. So coming into Wednesday, what I was mainly looking at was this 4-hour. So I wanted to be bearish because I did see, at the time we were like closing below this 4-hour, and we had these relative equal lows, and it looks like ES was trading towards this. So I was like at the start of the day bearish, but we ended up holding this 4-hour gap, sweeping out this intermediate low, sell side liquidity here, and yeah, at that point, then I flipped bias because it was pretty obvious. From here, this is a trade that I 100% should have taken. In hindsight, this was an A++ setup. I just wasn't that confident in it. I don't know why. But yeah, it was this 1-minute IFG here. This was a mech model we were delivering off of. We were delivering off of this 15-minute gap here. We also traded below equilibrium of this range here. We hit OTE pretty much perfectly, ticked it. We had a 1-minute IFG. And we also had a unfilled 5-minute gap right here. So that was a trade. You break even at the 5-minute, and then it absolutely ripped. It was just a beautiful, beautiful long. Right after this, we actually got a really nice mech short. There was just back-to-back mech model. Ready? So we swept out this high here. We also traded up into this hourly breaker. And right here, so this is like this breaker block right here. I dare. We hit equilibrium of that breaker. This was super nice. And then we ended up getting what was it, a 2-minute or a 3-minute? I think it was a 3-minute. Yeah, so I took this 3-minute IFEG here, target being the unfilled 5. And yeah, those just 2 mech models that played out really, really nice. But yeah, do you guys have any questions about this day? Just like CE of the breaker. I think this was probably just like equilibrium of this breaker around there. Why did you put your stop at the swing high? Just not necessary. I think I had it like the order block too. I think it was like a really good stop. Not necessary. How about in regular? What do you mean? Do you record? Yes. Do you consider just one of the candles as a breaker or a series of the candles? Just consider one candle as a breaker or a series of candles. One candle. Like I'll just consider like the last down close candle. I mean, but okay, that's a good question. I consider that. That's like, obviously the most sensitive point. But I'll put my stop loss at like the series. For example, like this breaker here, I'll put it at like if I were to take this short, I'd put it at like the series. Like series. Stop loss being here. If we didn't have a breaker block, would you still take it on the hourly? Maybe, I don't know. I think
If there's an unfilled 5-minute gap against your trade, would you still take it, or does it just depend on R? Bro, you just discovered the mech model. That is the biggest gift there could ever be against your trade, an unfilled 5-minute gap. So, yeah, that's actually a great thing. Obviously, you don't want to be taking a trade like maybe you're saying if it's like super close, yeah, you don't want to be entering the trade. Yeah, that's what I was assuming that's what you're asking, honestly. And yeah, like you said, if you have at least like about a 1-to-1, then obviously it's great. Because it's a great level to be break even and TP at, but you obviously don't want to be executing too close to it because there's 2 reasons mainly. Just when you take a trade, for example, really close to that unfilled gap with a mech model, and like you don't even have close to a 1-to-1, most people won't go break even just because like psychologically they're like, oh bro, like we just traded into it, like we were right there, like I don't want to go break even. It's just like a psychological thing, obviously, and people try to ignore it and think that we'll just fly past the 5-minute, and you'll probably get stopped for being a dumbass, or it's just like you get break even immediately. So it's kind of fried.
We do have a mech model. It's just an inversion for rally gap targeting an unfilled 5-minute or 15-minute gap, and use the highest time frame. Yeah, but you can see here it worked out perfectly this day. I only took this trade though, but this was
absolutely different. You can be profitable using PDI and mech model. That's literally the only
pretty much all we trade.
Of course, there's like discretionary and shit, but realistically, bro, all these inversion models Blake and I use, it's like there's only slight discrepancies between each of them. If you know one of them, you're good to go. That's all you need, dude. You can be super fucking profitable.
Do you sometimes don't move your stop loss to break even? For example, if your stop loss after the inversion, A for value gap, creates that I think I need to see I don't really understand the question. If your stop loss after the inversion for value gap creates that, you can support your trade further. Okay, so I think what you're asking is just like, will you not move your stop loss if there's like a fair value gap to support it to go further? Yeah, I mean sometimes, guys, like the break even point, like I don't always got to break even. Like there's a lot of times where I'll show you the trade on Friday where it was a break even and it technically was a break even trade. If you utilize break evens like that. But there's also times where I just have like a lot of discretion. I'll hold it and I won't. The break even is really, really effective. Obviously, and it's really good. And half the time it does save you, half the time it doesn't. With screen time and with my screen time and just overall drawn liquidity and confidence, I don't utilize the break even like too much. I do a lot, but yeah. Anyways, it again, dude, it just really depends on the setup. but I do suggest for beginners to utilize break even a lot because it is super, super helpful. All right. So after that trade, that put us at 1-1 for the week. So 1-1 for the week there. Then coming into Thursday, we had a really, really nice trade here. This was overall just a textbook, beautiful day. So does it count as an SMT when ES makes equal lows at the low? I don't really think about it like an SMT now, but I don't really care about what's it called? What were we just talking about? ES equal lows. Okay, so coming into the day, if we go to this daily bias, what was this day? This was Thursday, February 13th. Yeah. So this was a pretty easy bias for this day. It was very simple. We were just in bullish order flow, right? So we were clearly respecting this 4-hour bullish fair value gap and the discount. We were also had this 15-minute gap right here, and we had data highs. So a super, super easy trade here was just for price to trade lower into this 15-minute gap. I wanted to see a 930 Judas. But my targets overall in the day was previous week high on the 4-hour. So I was just super bullish until previous week. And I was going to stick with that bullish bias until previous week. Now, this is honestly a really good day to just study price action because it was something that I want you guys to just pay attention to. So first off, bullish why? Because the 4-hour, we traded into this 4-hour gap at what time exactly? 2 o'clock to 5 o'clock. This was inside of London session. London session also swept out this intermediate low inside of this 15-minute gap right here, right? So this low is sponsors. There's not a reason for price to trade back to London lows. And I'm not going to be bearish until previous week highs hit because the daily profile doesn't suggest bearish, right? It's very, very obviously bullish. Also, now there's times where data highs and data lows where I won't trade it, extremely mechanically in the way that, if we take out this high, then I'm just going to short to the low. No, for two reasons. One, obvious bullish bias. Two, this candle actually did something. Actually, I don't even think this was a data low. Oh, well, you could have traded like that actually. But people were saying there's a 5-minute data low or whatever, right? Which it is. And this low did something, right? If you see a data low or high that doesn't take out any prominent liquidity or, let's say it leaves relative equal lows, then that low or high will probably get traded back to, right? Because, generate liquidity or something. But if we sweep a low and we're in bullish order flow, liquidity is taken here. Just think about it. The markets move logically. We already took out sell stops here. Why should price go back lower to here if we are bullish, right? If price wants to head all the way up here, and that's our target, and we already took out sell stops here, there's no reason for price to go down to this, right? So what you should be paying attention to is just the imbalance that gets created here and not this low, because this is not a low that needs to get taken. And I'm just saying this because I know I got a lot of questions just overall on that. Why didn't you wait for that low to get taken? Okay, so 9:30 opens. We just rip up to the target, and that is completely fine. I was overall just waiting. Now, there was a lot of trades that I faded. And then there was one trade that I took, which was really good. Okay, so this is the first trade I faded. It was a short here. A lot of people took this for a short. Now, I didn't take this for two reasons. It was a 2-minute IFVG. We got a 5-minute change state delivery. We were rejecting. Rejecting a gap right here. Two reasons I didn't like this. For one, right, I simply didn't have targets for lower, right? So we traded into the unfilled gap here. Okay. Now, what are your targets, right? If you took this trade, you're literally just pattern trading. I don't understand. It's just a very pattern tradey type of trade, because if you just look at everything we just went into, right, this liquidity is already taken. This liquidity is already taken. We're bullish. We still have targets higher, right? So there's no reason to be bearish. There's nothing suggesting bearish, right? Liquidity is getting taken. We are displacing higher. This run lower is not displacement lower. It's a buying opportunity, okay? So I saw this and I wanted to get that confirmation of structure. So I wanted to see this work. So we had an inversion for value gap here. I didn't take this one. This was a good trade. If you took this, this was a great trade. This was a 4-minute also wasn't you could have taken. I didn't take these. I waited for a continuation. I was just waiting for structure. We ended up getting a really beautiful continuation model right here. Okay, so also if you took these two trades here, these were good trades. I would say these are this long here, and then also the 4-minute long was also a good long. The 4-minute break. Okay, but I waited for this one. Now this was a really textbook continuation model where we traded back into this 5-minute bullish gap right here. We generated liquidity right above here at previous week high, right? We didn't take out previous week high. We just generated liquidity there, okay? So this is exactly what I want to see. We then ended up having a 5-minute gap. If we were going to be bullish, we should respect it and get lower time frame confirmation out of this gap to then seek previous week high. If we are going to be bearish, then this should get displaced through in this 5-minute order block, this 5-minute inversion. There was a lot going on for this to work. Also, we traded into this 4-hour OB right here. We also traded into true day open right here. We tapped true day open. So just overall, these levels were just like great levels. This OB, true day open, this inversion for value gap, and it was inside of a 5-minute. So I had super, super high confidence in this. I took this. This was a no-brainer setup. And yeah, we got a 2-minute IFVG right there. I got in right there. And then we had a target of previous week high. Really simple, 1-to-1 RR. My stop loss was at this low here. I think it was like around here, maybe here. I can't really remember. But I had it stop loss here because we had a fair value gap right here. And I did not want to see this get traded through. What is true day open? It's the new day of price at 0.0. Yes. If we disrespect that 4-hour fair value gap, what would you do? Take a look at that buy. You look for a price to take that buy side liquidity on the 4-hour. If we what? If we disrespected this 4-hour gap, then I'll probably look to see lower.
Yo, I just want to say you guys need to stop asking how many minis and micros you should trade. Just because it's never a set fucking number. Like, you guys need to shut the fuck up about that and realize that it's all percentage based. Sometimes you can trade minis, sometimes you can trade micros, sometimes it's 2 minis, sometimes it's 1 mini, sometimes it's 10 fucking micros, sometimes it's 4 micros. Like, it depends how much volatility there is in the market. There's literally no definitive answer.
Yeah, guys, trade. Like Patrick was saying, I was thinking about it in percentage. Like, only trade 0.5 to 1% of your account. I'll just say that 0.5 to 1% of your account. And for example, here, if we have a 71 tick stop loss, then okay, I can go in with 1 con, right? Anyways, and that's risking $710.
Someone's really curious regarding stop loss placements. I mean, listen, like, with inversions, it's not it's a no-brainer. The stop loss is a no-brainer every time. Swing high or swing low, right? You don't need to really utilize that wick completely unless there's like an SMT, in my opinion. But there are times where you can put your stop loss a little bit tighter. And those are like times where if price creates an OB or you have like a breaker in play or something, that's like extra confluence for why your trade should hold better. But like, realistically, utilize as much as you can of that leg. It does, like, you'll never ever be punished for using more of the trading leg, like for using just the swing low or swing high. That will be your best friend every single time.
Yeah, like for example here, I don't need to put it all the way at the swing low in this scenario, right? Obviously that's stupid. You're not going to put it at the swing low here. That's just, like, logically, if we have a fair value gap that gets created here, right? We have a bullish fair value gap right here. If this is going to get disrespected, do I even want to be in this trade anymore? No, right? I want to see bullish P rays get respected. Now, this is an example here where the break-even point would have not saved me, right? If I went break-even at the little intermediate high right here, which, this would have made, not worked. Because I had really high confidence in my draw on liquidity. And there's times where, I'll go break-even, and if I don't have high confidence, but majority of the time I won't do it at like this high. Anyways, that was the trade here. My stop loss, it even could have been, honestly, well, no, this is fine. But like here or here, before I get below. not bias. What does that mean? What questions do you guys wish people asked? Whatever. I don't really care, but like just, but there's just no I don't care what questions you guys ask. But yeah, I do see that question like asked every single day, which is why like we just wanted to say it. Just like how much mini should I use on this account? How many minis should I use on if I'm trading on this account size? Like 0.5% to 1% until you build a buffer, and then you can do what you want. Anyways, why didn't you take the first 4-minute? The 4-minute was good. I didn't like it just because the intermediate high was like here, and we broke it. Like there's like times where, all right, for example, let's say we have a trade where the inversion's like here, and we trade into it, and then okay, and then we get the inversion after, and then like your entry's like here. I like this. Why? Because it's like we already broke, break a structure, CISD, break, or whatever the fuck it is, right? Whatever it is there, we already broke that high, and we got displacement through that high and through the inversion. Versus if the intermediate high is like really high, and it looks something like this, for example, if it's like above the fair value inversion, and then you have to like get the inversion here, then it's like you don't really know. Then it's just like a weird break-even point. You don't really know. But it overall was a really good setup. I just kind of didn't plan it well. If I looked at that, I don't know. I just didn't plan it well for if the candle would have closed how it did here. I thought it would close above, and then I'll get a better entry. But yeah, in hindsight, the trade I should have taken was this. We were rejecting this 1-minute OB here. We didn't need to go lower, and then we got a really nice fair value of entry here. I was even going to go in on this OB. I just completely missed it. But obviously, patience pays. We got a really nice 1 to 2 RR trade here. All right, let's go into the next one. Can you please do a quick example of a perfect CISD? A perfect CISD. I see what you're saying.
What do you mean you asked them words? Oh. Do education.
Good one, bro. You like that? It's good, bro. A perfect CISD. It's probably a good one right here. This is a pretty good one. Oh wait, this is a news candle though, right? You'll see it on Monday. All right, we'll get into a trade. There's CISDs always. Friday, man. Okay, let's get into Friday. Do you have any more questions on this trade here? Yes, this is being recorded. There's so many confluences that build up to just a 1 to 1, 1 to 2. Yeah,
Big
man.
facts.
That's true. That's all you
Big
need
facts,
to make
big
money,
facts.
brother. You do not need 1 to 10 RR to make money.
Motherfuckers need to stop. Like, I don't know who in the industry brainwash motherfuckers that think that you need like high RR, bruh. Like, money is money. You just gotta you need a good win rate, bro.
You need to get a win rate, and you need to just allocate yourself in prop firms. Like, that's literally it. Real shit. Okay. You trade on early market close days? No. Can you explain in the end of charting session how do you combine NQ and ES? Wait. Can you explain in the end of
It's
charting?
only useful for S&Ts. Sorry.
For example, if we did have a textbook setup on NQ, what we could have on ES that could invalidate our NQ textbook setup. There's nothing. Yeah, I won't use NQ. Like, if I'm taking a trade here on NQ, the only thing that invalidates the setup is, for example, my target here is previous week high. If ES takes this high, then I'm not taking it. But like in terms of like PD arrays getting respected or not, I don't care about that, because ES is just does not move as clean as NQ, and doesn't respect or PD arrays as well, and doesn't disrespect him, and doesn't move as well. But I'll use it just for higher time frame and just for my targets. All right. Monday market closes. Yeah, I'm not trading tomorrow. Um, let's get
Oh,
into.
sorry. I misread this question completely. Someone asked how do I stop closing positions early? Like I close it at 1 hour for no reason. But I thought I just read how do I how do I close positions at 1 to 1? And I was just like, bruh, close the fucking position. Like, are you stupid? Um, but I understand what you're asking now. Yeah, I mean, you have to understand that like these models, this win rate isn't based off of like any any emotional factors. Every level we target is technical. Um, that being said, like you're not trading our model and you're not going to reap the benefits of that 70% win rate if you are closing based off emotions. Your targets should always be technical, not emotional. There are times though where you will close at 1 to 1 just cause, and that's because let's say we're taking a mech model long to an unfilled 5, but we don't have quite about a 1 to 1 towards unfilled 5. So we wait for price to trade into unfilled 5. Once we hit the unfilled 5, we go break even, and then we wait for 1 to 1 before we take partials or close. That's like one scenario. But if you are closing early, you're not winning at all. Like that's not a good trade. You know what I mean? That's you should never praise yourself for a winning trade if you didn't follow your rules. So just make sure that anytime you're closing or taking partials is at least at the 1 to 1, but definitely at like the internal high, the unfilled gaps, any prominent liquidity pool. Um, and that's really it. Make sure you're going break even where you have to be all the time. And yeah, I just can't emphasize it enough. Like you let your emotions get involved and you decide to close based off like an emotional factor because you see like a lot of money on your screen or you see like you're red and you freak out. You're not trading a winning model at all. You're just gambling and probably better off going to the casino, like I'm telling you straight up. So just let fucking price do its thing, and you see it. Like, dude, were you part of the live streams this week? Like, you see it all the time. Blake and I will not touch our positions. Like, we will literally never close our trade until the targets are hit. Like, there's limits where our targets are. Like you saw me, bro. You saw like me go from taking my first CP to thinking that fucking previous week high was gonna get taken. We edged it. It hit my break even. What can I do, bro? Like, there's nothing I can do. I have to let the model play out as it should. Then what do you notice? Previous week high gets left intact. Another opportunity presents itself. Blake takes a trade towards previous week highs. What does he do? He doesn't touch the fucking trade at all until previous week high gets hit, right? Then the trade closes, and that's it. But you need to understand that this is a game of probability, and once you're playing with emotions, you're not playing with probability whatsoever. So just yeah, I don't need to yap too much about that. Lock the fuck in.
Um, hell yeah. All right, let's get into what were some things outside of trading you guys think were holding you back from being profitable slash consistent? Um, Dude, to be completely honest, like the answer I just always have just been giving is just like you know what you have to do. And I mean, really, it was just me knowing what I had to do, and everyone knows. You guys know what you have to do. Like we tell you every fucking day. You know, like Patrick was just saying, don't FOMO in your trades. Don't close your position too early. Let the model play out. Trade only the model. Follow the model. Follow the rules. Follow the risk. Don't over leverage. Don't over trade. It's just like that. And I mean, that's just the thing that really finally clicked in my head where I was like, all right, I'm losing so much fucking money. It gets to a point where I need to stop losing this money. So what do? Let me just try following my rules and risk. And that's what made me profitable and consistent. Because at the end of the day, bro, you're not going to be profitable by over trading and over leveraging and over risking. It is just not going to happen. Like, no matter, like, I just can guarantee you guys, and people don't just say that for the fuck of it. Like, no, it's a thing. It's real. And it's just, I find it so funny that people always just like, I don't know, just want like what's the secret sauce of trading? What's like the real best psychology advice? Like, it's just like, do what you have to do, dude. Like, stop bullshitting yourself. You know what you have to do. Just fucking do it. But yeah. Anyways, let's get into this this trading day here. So this was another day where we had a pretty obvious bias. It was a very simple bias for here as well because mainly we had just a very obvious bullish bias, right? We were bullish order flow on the higher time frame, even though we did take previous month high and we had an SMT there. This is a question I got was why weren't you bearish? We had an SMT with previous month high, and we also we swept liquidity or some shit, whatever. Guys, just because we have an SMT or just because we sweep liquidity, that doesn't make my bias like flip just because that happens, right? Now we have to look at the market and okay, do we see structure that's validating a change in delivery? Do we see structure that's actually validating this bias? There's no reason to because we're still bullish on the higher time frame, still bullish order flow. We're still respecting bullish, disrespecting bearish, right? So again, there's just no reason to be bearish in this scenario, right? Also, we just had really nice London highs here. We had generated liquidity. We traded into a 1 hour OB here. We traded into this 1 hour fair value gap, and we inverted bearish PD rays on the 1 hour, right? So disrespecting bearish, respecting bullish. So still in bullish order flow, no reason to be bearish, right? So that was the bias coming into the day. So I was looking for longs up into these highs here. Really shitty open. We had a really choppy open. I took 2 trades this day. The first trade was based off of, wow, this is really bad price action. First trade was based off of this. So this was actually I think it was really good to I think this was a really good day to just overall look at price action this day and Thursday. Like just study these days because this is actually really nice. We had equal lows here. Now, this is a time where equal lows, for example, here don't matter. Why? Okay. So first off, we had this intermediate low inside of this fair value gap, right? This was a 15-minute intermediate low. We swept it. And then we created equal lows after sweeping out this low, right? So technically, like this is a protected low, but we had equal lows, so I wasn't looking at it as oh my god, wow, as protected, right? So this is the condition, right? If we are going to be bearish, then we should go towards this equal lows and data lows, which wouldn't have been a bad short, but if we're going to be bearish, we should disrespect this, right? If we're going to be bullish, what should we do? Respect it and get 1 minute structure out of this. Same exact scenario like from the trade before. Like this is the same exact trade. And then the trade I took here is going to be the same exact thing. It's a very, very simple continuation model of just a 5 minute and then a 1 minute inversion, right? So we ended up having this bullish for rally gap right here. And this is a trade that me and Patty took. We respected this bullish for rally gap. And again, people kept asking me, yo, why are you taking this? We have equal lows here. The equal lows are not at my stop loss, so I do not care, okay? So, for example, if the equal lows are, like, right around here, or it's at a point where I'd expect price to get traded to, but not, like, equal lows maybe at the intermediate low, but we already swept liquidity here, right? So, I didn't need to see these equal lows get traded back to until the rest of this buy model is complete, and I saw this as just liquidity getting left for a sell model back down for later, right? Because at the end of the day, it's okay to take trades when we still have liquidity resting. For example, we equal lows here, data lows. Why? Because we're just simply in a buy model. And when we're in a buy model, we're going to generate liquidity for, shorts, right? Now, we got this 2 minute IFVG right here. This is the entry. TP1 was just at around a 1-to-1. I think we took a TP like around here, or this is like a 1-to-2. This was really nice. I think a TP around a 1-to-2 RR, and then break even. Okay. Now, this is when it was another textbook. I mean, this is just literally, guys, this does not look like the exact setup we just took on Thursday. Like, tell me I'm wrong. Is this not the exact same setup we just took on Thursday? Where we edged this high, right? Where we did not take out previous London highs here, right? We ended up generating liquidity. And there was 2 things I was looking at, right? We generated liquidity, we generated equal highs. Like, that person was asking me, what does a textbook continuation model look like? I'm going to show you right here, right? We generated liquidity. We didn't take out the external target. We generated equal highs as well. And I also, I didn't take this long. So I faded this long. Can anyone tell me why I didn't take this long? Can someone tell me? Anyone remember? Or does anyone know? No SMT. Okay. Equal lows. Yeah. Yeah, pretty much all of you guys are right. Pretty much all of you guys are right. Okay. So, 3 things why I didn't take this long. Number 1, we did have, where were these equal lows? We did have equal lows at my stop loss, right, which was right here, and there were spread apart equal lows, and they also, these equal lows they didn't sweep liquidity like, for example, here. They were just equal lows, which is just a good liquidity pool, right? So we had equal lows at my stop. That's one reason. The other reason is that we had ES trading pretty low here. So if we go to ES, we had ES trading to this sell side liquidity. Now, why did I want to see this sell side liquidity get taken? What is this? This is an intermediate low inside of a fair value gap, right? So this low, I said, okay, if I'm going to be bullish in this scenario, if I'm going to take any other trade after this, I want to see this 1002 low get taken on ES and then have an SMT form with NQ right here. All right, so this is exactly what I was waiting for. Like, I was calling this out before this even happened. Like, exactly what I was waiting for was this, okay? Now, also, because this is a 5-minute bullish rally gap, right? So if we take out the 5-minute intermediate low here, we get an SMT, right? This is just going to be a really, really nice manipulation move to go higher, right? So we end up taking out these equal lows. I didn't take this long. I also faded this long. A lot of people ask me, why didn't you take this long? Can anyone let me know why I didn't take this long? We swept the equal lows. We were delivering from the 5-minute for rally gap. And we had a 1-minute inversion. Why didn't I take
Because
this?
you gotta be a fucking retard to take that. Like, stupid.
Stupid. No SMT, CISD, no. Not a CISD. I don't care about CISD. It's not necessary.
Go to the 3-minute.
3-minute. What's on the 3-minute?
I don't know. I just wanted to say that.
We had a fair value gap lower, 500 above. No, not a 5-minute right above. That's not why. No, that's not why either. No higher time period, not rejecting or anything. Okay, it was simply just because we had this low, right? So if we just look at ES, right, we're trading towards what? This intermediate low inside of this fair value gap, right? So I'm going to be waiting for that, guys. I said I'm not taking a trade, and this is things that you guys have to do. You have to be reactionary, but also at the same time, you have to set yourself conditions. Because I see time and time again, the reason you guys are losing so many trades is because you're being too reactionary. In the way that I tell myself, this is exactly what I want to see. If I do not see exactly this, then I'm not going to take the fucking trade, right? It's as simple as that. I wanted to see us trade lower, and now we had this 5-minute intermediate low inside this fair value gap, right? If we already mitigated the fair value gap, a lot of the times, actually the majority of the times, I will not take the trade until we take the low inside of that fair value gap, right? Because we delivered from here, we then took out liquidity, and now what I want to see is for us to take liquidity again, right? That's just obvious, right? To then trade higher, okay? So that's the reason why I didn't take this long, right? It was just simply because I set myself with this condition. I was waiting for it to be met. Now, we ended up trading lower. We ended up sweeping out that low on ES, and we ended up having now this beautiful SMT. Now, this is, again, what I want to see. And right here, we get the SMT, right? And then this was just a textbook setup. We had a 1-minute CISD. We also had a 1-minute inversion for value gap, and it was a beautiful mech model to the unfilled 5-minute gap right here. So we had an unfilled 5-minute. This 5-minute ended up getting hit right there. I went break even, and then I left it running up until London highs. My stop loss was around here for around a 1 to 2.5 RR, and it just absolutely ripped. Does anyone have any questions about this? Do you look at all of this in backtesting? Like, are you? Yes, of course. Like, what I just, like, okay, for example, like, me having to explain all of this, like, obviously took a while, but I don't know, explain it, like, when I'm, like, backtesting by myself, like, I'm obviously not, like, talking this out. It's just more of, like, something I already know in my head, you know? Like, yeah. Can you explain your stop loss placement? Yeah, I think it was just a fair value gap low. Best out of the week, yeah, it was. That is some genius analysis. I agree, I completely agree. Like this day was, like study this day, like study, like rewatch this recording because I like there was a lot of sauce that just got dropped. That
Study it, bro.
yeah, literally. Why didn't you set your stop loss below the last down candle?
Baka. Nani.
What do you mean the
Muka
stop loss below
sasa.
the last down close candle? What down candle? Like the wick here? I mean, it doesn't matter. You can do it there or here. Where can I watch past charting sessions? You can watch it in the recording side. So things that could invalidate the trade as equal lows as your stop loss, or if we have closed liquidity on. Yeah. So if this is something that I see a lot of times. For example, if we're like this on ES, right? This is a time where I'll be like, okay, I'm not going to take a long until this low is taken on ES, right? Because if it's just so obvious that we're like about to hit a low or about to hit a high, that's like really obvious, then I won't take it. For example, and again, the example here was that 15-minute intermediate low. We were obviously trading towards it, so I'm going to wait for that to get hit and wait for that SMT to form, and that is going to be the true manipulation. Okay. I went for a short to data lows at 10:30. At 10:30. Got TP1, but that was it. Yeah, I mean, this is just not a, and I'm just, I mean, it's an okay short, but like we aren't delivering from anything, right? We haven't swept out this high, right? Until this is taken, and because we are still in bullish order flow, it's a bullish daily profile, right? There is no reason to be bearish, right? But yeah. But I know the draw in hindsight was London, yeah. Yeah. What buffer should I have for a request payout? I just say your drawdown, whatever your drawdown is on the account. Equal highs and lows, doesn't matter if it's a down close candle or not. Huh? TGR says it has to be a down and up candle to be a low. I don't understand the question. What does that mean, Patrick?
What? What does what mean?
This question.
Steak sandwich? Which one? I read the equal highs and lows doesn't matter if it's a down closed candle or not, because I know some people coffee in air has to be down and up candle be a low, vice versa. Yeah, so basically what I get what you're saying is like so why not? Yeah, sure. Yeah, bro. No, I'm kidding. Equal lows, equal highs, it doesn't matter, bro, what the fuck the candle is, whether it's up close or down closing candle, as long as, you know, they
There's no way
trade to the
TJR
same
said
level.
that. TJR does not say that. TJR did not say that. He did not say that.
As long as they're trading to the same exact level of equal lows and equal highs. But the most important thing that you need to know about equal highs and equal lows is that Blake and I don't really care if they're two consecutive candles anymore. That used to be like a thing that we really cared about back then. Not really anymore. It's been readapted. We've put that in the past. That shit got left in 2024. And nowadays, you really only want to focus on equal highs and equal lows that are two significant swings, mainly. They don't have to be swings exactly, but at least, you know, candles apart, like good amount of candles apart.
It doesn't matter the color. Equal highs and lows did not get patched. This is a beautiful example of equal highs and lows. We made equal lows right there, and then we also made equal highs. That was a beautiful example. Look at this. Text.
Blake destroys racism in one sentence.
Yeah, it doesn't matter the color. TJR says for a low to be formed, it has to be a bearish candle and then a bullish candle, and the lowest point between the two is a low. Oh, okay. So so it's a 3 candle pattern. A swing high and a swing low is just a 3 candle pattern where it looks. I mean, you can just watch the video on swing highs and swing lows on our YouTube, but there's market structure. It's just
Get good at trading, dumbass.
Yo. But it's a 3 candle pattern where it looks like this. This is a swing high. It doesn't matter the color. I'm just not changing the color, but this is like a swing high. I don't know what this has to do with equal lows and highs, but this is a high. Yes, it's a candle pattern like this, where this is a swing high and then a swing low on the other side. Okay. So when equal lows or equal highs are formed, 2 candles next to each other, at your stop loss, I don't care. It really depends on the setup. Again, like I need to see everything going on. What are you gonna do between market open and Tuesday? Just get my shit together. All right, Patty, do you have any?
So fucking real.
Do you have any?
I just want to do like psych today. Really, I was gonna do a lesson like on S&Ts, but I'm gonna do it on the next lesson. Honestly, because I was just gonna milk it, guys. Really, all you need to know is that S&Ts are mainly valid when they're inside a higher time frame Peter rate or they're a significant liquidity pool. You don't gotta focus if there's always gonna be S&Ts happening all the time, but just focus on the ones where your drawn liquidity is at. That's really as simple as it gets.
Yeah, in simple terms.
Yeah, I'm down to talk about psych after.
No, I'm just responding. Could you simplify the entry model or what you look for with an illustration? There's so many conflicts. I can simplify it, but I'll say this: if your model is too simple, I don't know how to explain it, but anyways, I look for this. I look for price to trade into with a rally gap, or sweep a low, sweep liquidity, and then I'll look for an inversion for rally gap, and then I'll have a drawn liquidity. That is my entry model in the simplest way possible. Can you go through SMT? Yeah, so an SMT is just when a low is taken on NQ and a low is not taken on ES or vice versa. And for example here, on this day in particular, the low was taken on ES and it wasn't taken on NQ, but I don't know where it is. All the way over here somewhere, but this low was taken. For example, this was a 10.02 low. As you can see, this 10.02 low was taken on ES, and it wasn't taken on NQ, meaning this is a sign of reversal. Okay. All right. That being said, I'm gonna rip Gem because it's 7 and yeah, I want to rip Gem before it closes because I'm mad. But that being said, yeah, we do have a checklist going the what exactly is a mechanical model? It's an inversion for rally gap targeting an unfilled 5-minute or 15-minute gap. You can check the recording tab for more information on that. We do have a video on it. Do you have a checklist of things to do before going full time besides making sure my payouts are consistent? Yeah, that sounds good. 6 to 10 months. That sounds good. Anyways, guys.
Yeah, I think once you can replace your current job, it's pretty valid. Well, honestly, like not even just replace your current job, but obviously outperform your current job by maybe double. I'd say that's for sure a reason. And then, yeah, bro, like if you can pay yourself out across multiple accounts, and you can be financially smart and save up money and invest it on the side and all this, then you should be good, bro. But just be smart about your money. Definitely save and just stay consistent, stack accounts, get payouts across multiple accounts, and you'll be good, brother. You'll be good. Yeah, do not do meme coins. I've never made $1 on meme coins.
My main struggle is finding entry points. What do you recommend for me to get better at finding them? Set yourself conditions. Tell yourself what you want to see happen before it happens, and don't just be completely reactionary and don't just, see trades. Because I'll say this, at 9:30 open, right, you are going to see a bunch of things happening, and there's going to be 20 people in my ear saying, why aren't you taking this 1 minute CIC? Why aren't you taking this trade? Why aren't you taking this trade? And there's 20 trades happening. And my response to it always is I'm waiting to see exactly what I want to see happen. And if it does, then I'll take a trade. If it doesn't, then I won't take the trade. But set yourself rules, set yourself conditions, and that's how you find the best entry points. That's how you find those entry points. Okay. That being said, in order, do you know watch draw liquidity? No, there's no like best draw liquidities. Data hazard pretty strong though. Okay. But I mean, the draw and liquidity, like it just matters. Order flow, obviously, is just gonna make it. Your actual bias. How many Mac can have as many as you want on? I mean, 8-pack. It just depends on the prop firm, bro. MFF, you have 3, tops up 5. It's Apex 20, I think. I'm gonna start backtesting. Should I backtest both PM and AM? I would suggest just trading AM session if you're a beginner, honestly. Just trade one session. When you backtest, should you backtest the times you trade? No, just backtest the times you trade. That's a good question, but don't backtest other times.
Handstand push-ups.
Okay. I'm getting off here, guys. This was a really, really good session. I wish I recorded this for like YouTube because this was really, really good. We did go over a lot. I did give out a lot of sauce. I'm not gonna lie. For these past 2 days, you guys really should rewatch this because yeah, just a lot of sauce was dropped. Okay. That being said, guys, I'm gonna head off here. We have no trading tomorrow morning because it is a bank holiday. So do not trade tomorrow. It's a bank holiday. I think that's pretty self-explanatory. If I see anyone talking in VIP, if I see anyone talking in trading chat, it's just going to be an automatic ban. So that being said, I'll see you guys Tuesday. Tuesday, I will be going live for live trading. We have a good week ahead of us. I'm going to do a quick little weekly outlook, and then I'm going to get off. But coming into next week, I think it's pretty obvious that we're just going to trend towards all-time highs. So just a continuation towards all-time highs is the bias. But yeah. If you guys have any questions, feel free to DM me. Feel free to add me in VIP chat or trading chat or any chat you want. And I will see you boys later for another day.